watching Your Trades with me, Shreyanshi Singh, and with me is Sneha. And over the next half an hour, we'll help you make sense of the day gone by in terms of trade, tell you which stocks you should keep on your radar, and tell you what the brokerage has also said as well. But Sneha, first things first, it was quite the interesting day. That record high level did really elude us today, but then fingers crossed for that to happen soon. But then when you take a look at Nifty, it managed to hold up pretty well above that 25,000 level. When you take a look at the top gainers, you do have metal as well as realty and IT. Of course, you did have Hindalco, the likes of NMDC, or a lot of these metal names that were buzzing in today's trading session as well. In terms of realty, you did have the likes of Brigade Enterprises, even a Prestige Estates. All of these counters underpinned the Nifty Realty Index as well, and that was the second top sectoral gainer as well. When you take a look at IT as well, quite some strength that we saw coming in for IT as well. What didn't do well though, on the other hand, was the media as well as the PSU Bank Index that did not hold that well. When you take a look at Nifty Mid Cap, you did see some amount of gains come in there as well. So a good picture is what we saw for Nifty Mid Cap. Can't say the same about Nifty Small Caps, Snehi, because that was a little bit of bucking the trend at this point, and that is something that we saw at the end of the trading session as well. But from the IT space, you did have names like HCL Tech as well that held up quite well. Even brokerage counters, the likes of JM Financial, you did also have a host of these companies, the likes of Bajaj Finserv, or even a Tata Consumer that held up quite well in trade today. So that is the kind of roundup that we saw, but inching towards a fresh high and firmly above 25K is where the Nifty was at. When you take a look at some of these brokerage counters that made it to brokerage radar, first you do have Emcure, and Jefferies did initiate a buy with a target price of 1600 coming in there as well. When you take a look at Zydus Life as well, even that stock was buzzing in trade today. So that one is also an important one to watch out for. And so is Bansal Wire on similar notes in terms of the kind of move that we saw for that one. On your screens, uptick of about 6% coming in for that one as well. Now, of course, you did have the NCLT not to merge fusion as well as Just for Kids with Honasa, and Honasa Consumer was a stock that we saw buzzing in today's trading session, along with the likes of Paytm as well as Nykaa, Snehi.
Absolutely. So lots of stocks to watch out for today, lots of spaces and sectors also to watch out for. Quickly want to highlight a couple more stocks, and we will be having Ashesha joining us later in the show and telling us about these stocks in detail. But let's pull up a PTC Industries, locked up in upper circuit 5% today. You had Zentech, that stock was locked up in upper circuit on the back of that QIP news that came in for Zentech. However, Zydus Life was down 6%, Max Estates up 6%, Religare Enterprises did see a weaker trade coming in today, 4% lower on that front as well. Shilpa Medicare up 4.5%. So these were some of your top buzzers today. On the back of order wins, you had KEC International, Ashoka Buildcon, JSW Energy, BHEL. All of these stocks were in focus today. And let's talk about an ET Now exclusive that we'll be telling you about more later in the show as well in detail. Aster DM and Care Hospitals merger could be on the cards by October, could take place by October is what sources have told your channel. So this is an interesting development to watch out for. And also we've had the announcement coming in today from the governor about central bank launching the unified lending interface. So this ULI announcement that came in from the governor today was a very interesting development to watch out for as well. So this is largely what today's trading session has looked like, and very close to record highs, but we've not crossed the record high level. We can only hope that tomorrow that happens. And to discuss more about that, let's bring on board Mileen Vasudeo, Senior Technical Analyst at Arihant Capital Markets. And Mileen, I have to ask you first question. We've held on pretty strongly in today's trade. Do you think tomorrow is when we scale a new fresh record high for the markets?
Good afternoon. Today, if you see Nifty also, if it open up with a gap and then this gap remains unfilled, this clearly shows that the undertone in the market is positive, and we are very close to the prior all-time high of say 25,078, and we are of the opinion and we maintain our stance that Nifty is going to continue its momentum on the upside, and we are working out with the targets of say 25,300 to 25,500 levels. And even if you see the breadth of the market always always remains positive. That clearly shows that there is a broad-based rally which is going on in the market. So clearly, a buy on decline strategy should be adopted in such markets.
The buy on dip strategy is what you're recommending, Mileen, but I'm going to come back to you. Which are the picks that you have for our viewers then?
See, today, clearly we have seen a winner, that is HCL Technology. Even the IT pack was performing currently it is trading somewhere around 1725. Keep a stop loss of 1680, and target would be 1780 and 1800 levels. The second stock is Davis Lab, which is showing a slight sideways consolidation, currently trading at 4921. Keep a stop loss of 4820, and target would be 5130 and 5240 in a couple of days' time.
Okay, so HCL Tech and DV's Lab looking attractive on the charts to Mileen. Thank you so much for joining us. On that note, we'll let you go. But let's keep it going with all the technical talk then. And we now have Shrishti joining us in the studio to talk about two stocks that she has spotted on the charts. And Shrishti, take us through what you've spotted for us today.
So we are highlighting two breakout stocks today. Firstly, let's have a look at NMDC, because all the metal counters were shining bright, and NMDC has been one of the beaten down names, because if you will see, the stock has been in a continuous downtrend. But what was interesting to see, that after a long wait, the stock managed to break above its 20-day moving average, because all this while, starting from these particular levels, you will see that never ever the stock has made a strong green candle crossing its 20-day moving average and closing the day at the day's highest point as well. So that was a rebound that we spotted on NMDC, moving up above its 20-day moving average, very well supported by a long build-up and breaking its previous day high as well. That was Friday's close. So that was the first stock that we wish to highlight on the breakout side. Moving on to the next one, and that is HCL Tech. A while back, even Mileen Vasudeo was also talking about it, because the IT pack was on the move indeed. But what was interesting to see for HCL Tech is that the stock did touch its all-time high levels. And not just that, this is a weekly chart that you are seeing. Interestingly, you will see a rounding bottom formation for HCL Tech. Just last week, it was seen to be consolidating a bit. It did not make that great a candle, but apart from that, passing its and crossing above its previous week high, as well as very well supported by a long build up on the derivative side, boosted the confidence for HCL Tech. The stock did close more than 4% high in trade today, and that's we have spotted on the technical front as well, giving a breakout on the weekly front. So these are the two stocks on the breakout side. Back to you guys.
Alright, thanks Shrishti for those two stocks on the breakout side. Moving on then, speaking about the much debated large caps versus mid caps and small caps debate, Rajesh Bhatia, CIO of ITIMF, says that he sees value in large cap stocks. What are his views then on SMIDs? Listen to a slice of the conversation that we had with him.
As far as valuations and comfort of where to invest is concerned, see, if you look at the larger caps, the Nifty, if you just move to financial year 26 earnings, it's quoting at about 19 or 20 times. Our 10-year average of Nifty valuations is at about 17 times. I wouldn't call that particularly expensive given the context I just spoke about. So I would say the large caps are certainly a place where there is value, and that's really where one should be. Having said that, the India growth story, we are the fastest growing economy in the world. We are the most predictable story in the world. If anybody had to take a call, what market is going to do 3 times, 5 times over the next 10, 20 years, a lot of people would point to India. But who's capturing that best India opportunity? It's actually mid-cap and small-cap companies. So the growth rates of mid-cap and small-cap companies, defense, electronic manufacturing services, all of that, capital goods, engineering exports, all of that is really in the mid-cap and small-cap space, and where the growth rates are much faster. So at this moment, there is value in large caps. There is not as much value in mid-caps and small caps, but please don't forget that the India growth story is really panning out in the mid-cap and small-cap sectors.
All right, that's a word coming in from Rajesh Bhatia of ITIMF. But let's move on and talk about some interesting insights in the market that we've been tracking. While over 90% of stocks on the Nifty are above their 200 DMA, much fewer small cap stocks are above that level. Kunal and Nikun join in with what the current market breadth is indicating.
All right, now what do we have today? We essentially would be talking about new highs. And we spoke about new highs last week, that how Brazil has made a new high, how other emerging markets have made a new high, and Indian markets had to catch up. So while Indian markets are catching up, it is important to turn attention back to the technical setup. In this correction, have the excesses in the market been flushed out? And if one is looking at a new high on the Nifty, will this be a restricted new high which could be in 20, 30 Nifty 50 stocks, at max 70, 80 stocks, or could it be a very vibrant mid and a small cap driven market? So Kunal, what is your data indicating?
So, the narrative which was built over the last 3 weeks of this rally from 5th of August somewhere, when the markets bottomed out, that this is more of a mid-cap dominated rally and the large caps have not participated. But the data is completely contrast. Now, we looked at, the bifurcations of stocks or the percentage number of stocks which are trading above their averages. 20 DMA is short term, 50 DMA is mid term, and 200 moving average is long term. Now the data is quite fascinating because as we can see that 76% of the stocks on the Nifty 50 are above their 20-day moving averages. Compare this with small caps and mid caps, the number is 56% to 60% only, which means mid caps and small caps have underperformed. You look at the 200-day moving average, which is a long-term moving average, almost 95-96% of the stocks in the Nifty 50, just 2 stocks, I think if I'm not wrong, out of Nifty 50 are trading below their long-term moving averages. Compare this with mid-cap and small caps, the number indicates that mid-caps and small caps have not participated in the same gusto.
So if one looks at the participation in the 200 DMA, the Nifty small cap number is 78.
Correct.
That could also be a sign of weakness, that small caps are not participating this time, because 22% of the market is still below the 200 DMA. For Nifty 50, the number is 96.
Yeah, it tells you the lack of confidence, and that's why you're seeing the index, after every 100 point, 200 point rally, it just stagnates at a particular zone. It's because the mid caps and small caps have not participated. Now that's the point. Now if the index, for example, breaks past about the all-time high levels, the scenario across the globes improves further, then confidence brews back again into the markets. That would probably take the next leg into the mid caps and small caps into a much higher levels.
Okay. So let's assume the data point which we referred to last week, which is that we will make a new high soon because global markets and the markets which matter, they are making a new high. If we make a new high this time on the Nifty, your view is that a vibrant rally in small and mid cap stocks could follow soon.
Exactly. The sector churn will start off again, the sector rotation which we've been seeing over the last many months. But the tilt would be more towards mid caps and small caps if we scale past about the new high.
Okay, that's interesting. Now Kunal is of the view that while we may optically say that okay, small and mid cap are becoming Humpty Dumpty, they're over-owned, overbought, the data what Kunal has seems to be indicating that not only Nifty is on course to make a new high, in that when it makes a new high, the vibrancy in mid and small cap stocks, which is right now quite active, I think could really become more hyperactive, so to speak.
Alright, then with that, it's time for a quick break right here on Your Trades. But when we come back, we'll take a look at how the derivatives roundup is shaping up like, so you don't go anywhere.
Hi there, welcome back. Still watching Your Trades on ET now. Let's take a look at all the derivative and FNO action that we've seen happen today. And for the August expiry then, Nifty looking rather flat. Surprising derivative action coming in on Nifty given the uptick that we've seen in this index today. But Nifty Bank, however, looking slightly hopeful because we are seeing some long build-up being created on Nifty Bank. So at least that looks promising as of now. It'll be interesting to watch out what happens on the derivative front, what the outlook is when it comes to Nifty, because we were very close to scaling that all-time high today, and if we actually do that tomorrow, I would like to see some change in sentiment and hopefully a long build-up getting created on Nifty as well. India VIX, however, if you take a look at that, 13.8, and despite seeing such a good day, India VIX is spiked only by 2%, so not anything to worry about at all on that front. Now on the active calls front for the 29th August expiry, call buying has been seen at 25,100 and 25,200, so those are some key levels to watch out for. And on the put side for the 29th August expiry, some put writing has been seen at 24,900 and 24,800, making 24,900 your next key support level to watch out for. So roughly 25,100 or 25,200 on the upside and 25,900 on your support are going to be crucial levels to watch out for in the days to come.
Well, absolutely, and there's a host of stocks that were under pressure on account of being on brokerage radar, and one such stock is Zydus Life that was under pressure after Citi released a note maintaining a sell rating as competitor Teva receives approval for a generic drug. In fact, my colleague Srishti Sharma is standing by with more details of the note. Srishti?
Well, yes, Teva has received an approval for one of the key drugs for Zydus Life Sciences, and that's the competition kicking in, wherein over the weekend we understand that Teva has received an approval for the generic version of Asacol medicine, which is actually used to treat the inflammatory bowel diseases. And for Zydus Life Sciences, it has been one of the key contributors in the overall sales, because Citi has come out with the estimates that the product did contribute around $140 to $160 million in their overall sales when it comes to the FY24 financials. And in the EBITDA, there has been a 25% contribution for this particular drug itself. And when Teva has received an approval for this one, this means that Teva will launch this particular product in the market, and they have also been granted 180 days of exclusivity. So that's the competition that will kick in and impact the sales for Zydus Life Sciences. And not just that, Citi also believes that the sales could actually fall by 40 to 50% for Zydus Life Sciences, as the competition in this product has been delayed by more than 4 years, and now the competition is entering. So the street seems to be unaware of the concentration risk out here, and the impact of the competition in this product should reflect in the valuations of the company as well. For now, Citi do maintain their sell rating on this particular stock with a target price of 890 rupees, and hence on the back of this news flow as well as on the back of this particular note, this stock is down in trade right now. Back to you.
Alright, that stock has indeed ended the day on a negative footing, and quite some big cut coming in on that stock. But let's talk about some other stocks then that were abuzz on the back of brokerage notes. You had notes coming in from brokerages on Emcure Pharma as well as Bansal Wires, and Emcure Pharma, however, fizzled out the gains that it had accumulated over the course of the day, ended in the green nonetheless. You also had Bansal Wire that held on to all of those gains that it did see throughout the day, ended almost 5.5% higher. There you have it. Let's take it across to my colleague Varun, who breaks down these brokerage notes for us and help us understand what led to this kind of action in both these stocks today. Varun.
Both the stocks are buzzing in today's trade with more than 3% of the upside. Let me start with Bansal Wire. Investec has initiated a coverage with a buy call and a price target of 440 rupees. They say that they have good, compelling competitive strength and impressive execution track record. Other than this, the earnings target is also very good, and they have good growth potential, and they say that from FY24 to 27 the company can grow at a EBITDA CAGR of around 40% with high teens post-tax ROCE. The valuation looks undemanding against a backdrop of strong growth potential and business economics, and hence they have initiated a coverage with a price target of 440. Now coming to Emcure, Jefferies have initiated a coverage with a price target of 1600. That implies around 15.5% upside from Friday's close. Jefferies say that Emcure is amongst the fastest growing India pharma company, and from FY24 to 27 you may see a profit CAGR of around 29%. Other than that, India growth is above industry, and that is very good, and the new launches that the company is doing will boost the growth going forward. They have strong they are developing complex molecules, and they have strong chemistry skills in developing complex molecules, which would aid further growth, and no exposure to volatile US markets are a key differentiator for the stock, and hence they have initiated a coverage with a price target of 1600.
Alright, thanks Varun for that update coming in. 5.6% uptick coming in for Bansal Wires. We also have a host of counters that were buzzing away in trade, and Ashesha is standing by with that list. Ashesha?
Well, yes, first up, let's talk about Honasa Consumer. The stock was soaring in trade today, up nearly 10% by the end of today's trading session, after the company informed the exchanges that NCLT has approved the merger of Just for Kids Services Private Limited, Fusion Cosmeceuticals Private Limited with Honasa Consumer. The stock was up 10%. Zentech, on the back of their fundraising plans, where the company said that they've raised 1,000 crores via QIP, the stock was locked in upper circuit of 5%. Kotak Mutual Fund, White Oak Mutual Fund, Motilal Oswal Mutual Fund were some of the buyers in this QIP. KAC International, on the back of order wins, where the company said that they've won orders worth 1,080 crores across businesses and across regions. This stock was up 2%. Shilpa Medicare, it was up 4.5% after it said that it has successfully concluded phase 3 studies of a drug which is used to treat fatty liver. This was up nearly 4.5%. Lastly, Akums Drugs, a recently listed entity, it was down 5%, locked in lower circuit after it reported lower expected set of numbers. So although revenues have risen by 5% YOY and the company has reported a profit on the bottom line, it did miss street estimates, and hence the stock was locked in lower circuit in trade today.
All right, well, let's talk about an 18 now exclusive we told you earlier. A key M&A deal in the healthcare industry is in the works. A due diligence on the proposed merger of hospital chains Aster DM and Care Hospitals is underway. Let's take it across to my colleague Anurag Joshi, who has more details.
A due diligence for the proposed merger of Aster DM Healthcare and Care Hospitals, which is controlled by PE firm Blackstone, is currently underway, and both the sides are aiming to sign a definitive agreement to seal the deal by as early as October. Now, according to the contours being discussed for the deal, Blackstone will end up owning about a 40% equity stake in the merged entity once the merger takes place. The Mupin family, which are the promoters for Aster DM, will be owning 20%, and peer P firm TPG will be owning 15% in the stake. Now the stock swap ratio for the deal is being discussed around 50-50. So that's the stock swap ratio that is being discussed. And also Blackstone had bought the stake last year in October 2023, and it had paid $1 billion, around $1 billion for the stake in Care Hospitals. And subsequent to that, Care bought another healthcare provider. This is a hospital chain mostly in Kerala called Kim's Health. So this was a combined entity, and now they're proposing a merger with Aster DM. In Aster DM, the Mupin family owns a 42% equity stake, and in April they had completed the separation of the India and the GCC, which is the Middle East business. And the GCC business, they offered a majority equity stake to foreign equity partners, notably the Gulf investors.
Alright, thanks Anurag for all of those important details on those likely deal contours. But with that, we're completely timed out on this edition of Your Trades on ET Now. From me, Shreyanshi Singh, Snehisha, as well as the entire team that put this show together, thank you so much for tuning in. Don't go anywhere because more news and updates are on the other side.